Good evening, guys. This is Ken at Tortoise Capital with Daily Strategy Podcast. We're moving out now on the learning management system. We're going to host it at tortoise.talentlms.com. Jason Ballard and Eric Morrison are my two partners in crime. They're both retired Army veterans, strategic planners. Doc Eric Morrison has worked at NASA and in the energy sector. Both combat vets, both trained strategic planners. Eric's been killing it with the Forex, so I've got him setting up a Forex course where he's going to take what he's doing and how he's improved it with the Tortoise techniques to get that started. More about that in a second. Jason Ballard's my teaching partner, a former student of mine. I recruited him to come back onto active duty after his retirement. He became an EMT and then felt an itch to continue to teach, so I recruited him to come back. He's in the doctoral program at Colorado Tech. At some point, he'll be one of my students again. I'm probably going to be his doctoral supervisor on his dissertation, and we're going to be looking at how to develop reliable professional education in a most efficient manner. Fear that will kill several birds with one stone. So as part of JB learning the material, I got him building out the shells for these courses that I see are going to be hosted at Talent LMS. They're going to be an a la carte option to take those courses, but also an annual learning library card, like an all-you-can-eat and take as many times as you want. This way I can start parsing out the materials into more like lessons and tightly controlled clusters, and I can work on version control instead of having everything everywhere. So he's going to start learning this material by building out the teaching courses. So that's going to get them moving. I should also say Danny sent me another video with another 6R in day trading today in SVXY, wheat and precious metals, using the sideways quiet channel technique. He's been just killing it. Oh, wait a minute. I'm sorry. Hang on. I'm looking for the daily trade. So let's get started with these first. So these are the files that I'm going to be uploading onto Patreon here shortly. But these are just the last 4 days Danny's knocked out. Let's see. Today it was 6R in SVXY and wheat and precious metals using the sideways quiet channel and more. This looks like this was a hybrid frog down and then an owl reversal at a minimum. This was the March 17th, 6R overall, a 9R in Apple, and you can see he's got the he had a short and then a owl reversal with two scoops and then a perfect RLXD exit, and timing it with the oh, I'm sorry, I guess he didn't get short on here, but he did a front running the owl with a PSAR flip and a 1, 2, 3 positions in, and then Apple and exiting on the RLXD and the PSAR flip. March 13th, he did 5R in NCLH and Lyft and JP Morgan, and his video talks through how he used the TC2000 bundle to find the opportunities, and then 2 scoops and an RLXD, followed by a short reversal, and then the RLXD exit here, perfectly played. And then March 10th, 9R in UDOW. The PBWs, that energy, the clean energy ETF, oil exploration in Johnson & Johnson. You can see this looks like, I guess that's UDOW. Yeah, it's UDOW. And he tries, let's see, long and cover, short, and cover. And all of these are on the KL bundles, kl-bundles.com. where you can play the videos. I uploaded a couple videos already to the YouTube channel, so just to let you know that stuff is there. Let's see today's trade. So sorry. Let's get our follow our bouncing ball. So this is that's what is it today, March 19th. This is on daily charts and SPY. So here's our 10, 20, and 30 days look back. Just notice look like the jaws of a giant river dragon or a hippo. You can see fair value has crested it and is starting to roll over, is now at 316. You can see the 10, 20%, 30%, 40% sell-offs. Monday's open is where it closed today, so right at 240. So it went from about 340 to 240, so that's about 30% sell-off right now. It's been as low as 40. Here's the one-day range. It was an inside day that had some weakness early and then had a reasonable recovery to close slightly net up for the day, but an inside day, so you can feel the compression and the tension as an inside day provides ambiguous evidence to both the long side and the short side. Even though it can be seen as like a sideways day, it's actually reinforcing the beliefs on both sides that they're right. So the breakout, when it occurs, is explosive. And so now we really want to pay attention to the breakout above the daily high or the breakdown below the daily low. And then on the daily low, it's ready to crash through the 10-day and the 30-day lows at around 226, which would be about a $14 sell-off, which would be about a 5%. So yeah, that could easily reach there. You can see the size of the daily range, how that could easily crash through those two. And if it gets through 226, there's nothing to slow it down till 210, which looks way back to the couple 3-4 years ago, and the Trump inauguration. That's the price levels that are there. So on the way up, we have the one-day high, we have the edge of the dragon, spine of the dragon, skin of the dragon, and Z1, or Z-1, I should say. The PSAR flip level at 278, the Bollinger Band mean, and the RL90 at basically 300. Fair value at 316. We have a... what is this one? This one is this is the closing the gap, essentially, or the peak of the fair value. Yeah, and this is the dragon hump and the RL10 hump, and then this is that the Z3 excursion at the top of the previous sideways quiet channel. So 345 would have been a breakout. Like if we hadn't had these 20 days of misery, then a breakout above the Z3 right here would have been seen as a remarkable move to the upside in the beginning of a new trend. So I've just got that marked off right now at about 345. We're deep into the winter at minus 40 on the MACD histogram, and no evidence of it slowing down. The Red River is now almost 3/4 of the way underneath the zero line. That's significant. We still have obviously a short side bias. So not much to love there, except for the opportunity to the upside because we have a higher low. If this had closed a little bit higher, then we would have had the setup day on a washout pattern. But because we didn't close higher than yesterday's low, we do not yet have the washout pattern. That's one of my favorite swing strategies. In the winners and losers table for today, you can see the S&P was up at 0.58. Big loser was UVXY at or minus 15%. The VIX at minus 10%. And if that's not noisy enough for you, you can TVIX is the other one. That's the double invert. So UVXY is the 1.5 leveraged. TVIX is the double VIX. So that would give you like 21% down today. Everything's still in the red on daily, with the exception of Treasuries has moved into weekly summer and daily fall. Excuse me. That's just a cough. It's nothing else. Big winners today. Simon Property Group at 24%. Gotta love the stops because I was short that thing in a serious way. Devon Energy, Tesla, Oil, Cliffs, McDonald's, Wynn, and U.S. Steel up 7%, 7.75%. Some of these are just overbought on an algorithmic basis, and people buying the deep future and Mars, I guess, with Tesla. Wynn, because they're hoping for a bailout of the entertainment industry, and energy and clean energy had their little gains today. Home Depot, that looks promising because as I look for the large cap names that are better than the S&P, these are the ones that I think people are signaling as they're buying quality on sale. Doesn't mean the bottom's in for them. Doesn't mean the market has had a bottom. No evidence of that yet whatsoever. In spite of, it looks like Trump maybe was reading our tweets and Facebook comments about the moratorium on mortgage and interest payments, and the Andrew Yang's UBI, the Universal Basic Income, and some unemployment insurance. It's a start. You know, none of this comes as a surprise. In my studies about the supply chain and the strategic national base, particularly with looking at logistics and wartime mobilizations, I study the heck out of the U.S. mobilization prior to and during World War II, and some of the things that got to be done there to dramatically and rapidly convert the entire economy of the nation to a wartime footing. And that's what I think we're in right now. And coronavirus I look at simply as the first wave of future pandemics. And when we defeat this one, all we've done is defeat that one. But systematically, you've got to have a much better response infrastructure in place, and you've got to unwind 30 years of globalization in order to become self-sufficient and much more flexible for emergency manufacturing in your own nation. You are not a nation if you don't make your own pharmaceuticals, steel, aluminum, energy, food, education, telecom, and entertainment, all of those things. You're not a nation unless you do that. And you're not a nation unless you can control your borders and provide for the common defense and support the general welfare, as our Constitution says in the preamble. So that's going to take 30 years to unwind all that and to recreate all of the craft knowledge that it goes into running those basic industries and good, honest work. Like, where are our tool and die makers? And, 3D printing will only get you so far. So the modern tool and die makers linked up with 3D printing, I'm very optimistic about that whole entire field. And three-dimensional, real-time, collaborative, distributed design for mechanical solutions that can then be 3D printed. So waiting to see that. Collaborative CAD design through the web. You can see how that could also be applied in genetics and genetic engineering. Exciting times. Wish I was young again sometimes. So those are the winners and losers for today. So Apple smashed. Walmart not as good. I'm still a little surprised at that. Maybe that was profit takers. Boeing still hasn't turned it around yet, but long term, I think the nation has to have Boeing in some fashion. So those are the ones that So they're above the line. There's Caterpillar, Timber, Clean Energy, Entertainment with Win, McDonald's, Devon Energy. There's a reason they're on my short list. In the auto framer, so these are opportunity trades. Let's see if we can see anything interesting here. So Boeing at 12 to 1, and with a $13 stop, that's like a 15% stop. It's 12 to 1 back to the 10-day high. At some point, don't we have to own Boeing? Silver, gold, energy, emerging markets, a lot of oil and energy. Chevron at 5 to 1. ExxonMobil at 5 to 1. IBM at 4.5 to 1. Travelers, American Express, Home Depot at 3.5 to 1 with only a 30-cent risk. Home Depot. If we're not buying new houses or flipping new houses, maybe we're just repairing houses. Or if a bunch of people are going to start buying houses to flip them, Home Depot, isn't that the way? And all of those are better than the basic trade frame on the S&P, which is at 3.3. So anything north of that is one where the sell-off was more exaggerated and the reward to risk is still better than the S&P. So that becomes a list for trade framing purposes. When you see the risk under risk calcs and the chosen risk is the max ATR, those are ones in which the daily move today was so large that a 1 ATR trailing stop is smaller than trailing it with the range risk. So the range risk is if you bought a mechanical open or a mechanical entry when it took out yesterday's high and just trailed it with today's range. That gives you range risk. And if that's bigger than the max ATR risk, which we have set at a factor of 1, then you pick the max ATR risk right now. So like Russell 2000, today's range was $11, but 1 ATR is only $9.90. So that's how big the move was in IWM today. Okay. Today's range move in the S&P was $15, but the ATR is $19. The first column, the minimum ATR is a quarter of an ATR. So we use this little automated robot here to pick the middle range between a quarter of an ATR, a full ATR, and then today's range risk. So it finds and highlights the middle range and then computes the reward to risk on that basis. So for those of you keeping score at home. Okay. So let's see what we can do now. Today's trades. Love this one. Oh man, do I love this one. DIA. So this is DIA, and I'm executing in UDOW, which is the triple leveraged long in the Dow, or SDOW, the triple leveraged short, or YM futures, but they trade identically to the ETF pattern. So so some things I want you to notice. So it gaps and then opens here and then starts selling off immediately. When it crosses below the VWAP, I get short here and I place my stop just above the VWAP. And then I want you to know, then right away, I notice where the skin of the dragon, the hump of the dragon is, and I just draw that all the way across because that's going to later on be an important price level. So that's, what that represents is, in the moment that this thing is selling off, what I care about is, well, what would the move to the upside have been that will negate however big this move is going to be. Like at this point when I'm short, I have no idea how far it's going to go. I think it might go to the RL270, which it did exactly. Oh, snap. But I don't know that from here. I just know that that's the first target that I'm going to look at. But if it starts selling off and then starts to reverse, what is the price to the upside that tells me that there's a new move underway? Well, the first one is the northern skin of the dragon, because that was the statistical high point in the previous 10 bars before the dragon rolled over. So if this goes down and then reverses and then crosses a falling dragon, when it gets above the peak of that dragon, that's always and everywhere all day going to be a significant price level. So that's why I draw that blue line all the way across. When this has moved far enough out of the dragon that I'm interested and I'm getting short because now I want to get on board what is turning out to be a directional move, the next price level that I'm interested in is the PSAR flip. So I put that little blue circle, and then I also draw that line all the way over. Because any price after this sell-off is done and it starts moving up, any price after this downward move that takes out the skin of the dragon, or the hump of the dragon, I should say, and then the PSAR flip tells you that's the magnitude of the move that really convinces you this thing is going up. So even though I'm going short, I'm already drawing my lines across to take a warning sign, if you will, like a road sign that, hey, this move, no matter when it started, but this move now just cleared all the negative psychology that was pushing this price down. That gets replaced by some buying pressure. And then by the time it clears those hurdles, all of the negative psychology is gone and only upside is left. That's why getting these two positions in later on becomes so crucial, because I have actual evidence that this stuff is working. So now I want to come over to this little point here. So we're 30 minutes into the day, and now the Z3 lines, this is the northern Bollinger Band, are formed exclusively by 30 bars of price, on 1 minute bars from the open. So all of the overnight gap is discounted. So in the view of these 30 bars of data, a price north of this Z3 line now tells me that price has left behind the previous 30 bars of psychology. This is now a 3 standard deviation move away from the Bollinger Band mean. And so if you decide to take this entry here, I didn't, because I was so close to getting confirmation and confirmation, that I was just glad to be able to move my stop like to the spine of the dragon or north of the PSAR by this time. Knowing that I had already programmed in some buys here and here, I didn't feel a need to add a position. But that was like confirmation, like a caution, hairpin turn ahead. And this is already well above the VWAP. And notice how the VWAP itself has started to slightly roll up. And the RL270 starts to accelerate from right about here and is going up. So that's all boding well for later on. Now, it turns out after I got the 3 positions in, that this hit my trailing stop while I was making this chart. So, that made it easy for me. So meanwhile, back to the original trade. Hybrid frog short, and then this is just automatically framed for me. That's my battle drill. This thing goes through the RL90, through the Bollinger Band mean. That feels good. Now it feels like it's on its way to the RL270. Moves down in an orderly fashion, finds support in the RL270, and then makes 1, 2, 3, 4 bars without further failure. Then gives me so that's bar 1, swing low, bar 2, and now you can see the RL10 is rolled up. We're going to get the P1 right here. So when price comes through the dragon, I just go ahead and take it. And then I get to lock in the short from 197 and a quarter, covered at 193 and a quarter. That's a 2% move, and we'll take it. Now the owl entry I take right here, along with the PSAR flip, and this is about a 75-cent move off the low of the belly of the dragon, about $1 move off the belly of the RL10 and the RL30, both rolled over. But I picked this exit for execution right there. So that would be about 500 shares, or the equivalent dollars at risk on $400. of risk with a 75-cent execution risk. And you notice down in here that we've gone from the fall into the winter right here, and then winter becomes spring right here. And so the timing on the exit is corresponding with the changing of the seasons. And now spring, optimism, and that's where you find owls in the spring. PSAR is going to support this all the way up. Belly of the dragon supporting it all the way up. See, we can see the Z3 intraday starting to form. It's expanding because of the directional move. The yellow dot, when it takes out the previous Z3 pinch, feels good. I'm programmed and take the automatic second position here. So now we're long from 190, call it 194 with a dollar stop to make it easier. And we get this, and so now we're getting a second position in at 199. So we're $5 to the good on a $1 stop. That's 5 execution R in hand. Second position. That's just markets money. That's a money management second position, even without the technical support. Third position at 200 and some change. So now we got 3 positions in. It gets to about, if I recall, 203 or 204, and then comes back and we get out around 201 and some change. So that is $7 on the first one, about $3 on the second ones for 10, and probably $1 for 11. That's about 11 execution R, plus probably 3 execution R or 4 execution R here. So that's about 15 execution Rs in the Dow 30 Industrials, for crying out loud. This one is U.S. Steel. I'm not short in America. Love these guys. You heard me talk about that. Why? So we're essentially buying options on U.S. Steel at $4.70. So you got the gap up, sell off, morning hook. Winter becomes the spring. Get the RLXD and owl entry here with the PSAR flip. You can't get any more textbook than that. So our entry's at 474. Our stop is at 464. So that's 10 cents of execution risk. So that's either, 1,300 shares or 4,000 shares, depending on how you want to use your position size versus execution size risk. When it clears the hump of the VWAP and the previous Z3, when it clears the Z3 at the time of the purchase, second position in now at $5. So now we're 25 cents to the good on a 10-cent execution risk. So this one is in, with 1.5 execution R in hand. And peaks at 550, cash at 535. So that makes 50 cents on the first one, 35 cents on the second one. So that's 85 cents on a 10-cent risk. That's 8.5 execution R. Now it sells off, one leg down, 2 legs down, and comes and is now resting in support on the RL270, and it just has creeped through here a little bit. So I'm now going to frame this one, and I want to talk through the logic of this one. I want you to appreciate the value of the RLXD exit after a Z2 excursion. And then I would say your mileage may vary. You might want to short that. You might short the second one under other circumstances with a high and a lower high in the Dragon and the RL10s. This would usually be an automatic short for me, except it's U.S. Steel and I have an emotional connection to them. And it's so close to the VWAP that I'm thinking the run is more likely to be done than just starting. So I just wait. It's finding support at vicinity of the RL270 and above the belly of the the morning VWAP. So I feel like this is an area where I'm just going to call this the yellow zone, from like the PSAR down to call it the Z minus 2. And price, I was stalking it right here at this blue line at about 490, 493. And if it had found support here, I was going to buy it on the green line at 495. And I would use the red line at 485 as my risk. So that yellow band is my 10-cent risk. So I would get long there. Or if it violates through 483, this is where I would get short, because then we'd be on the far side of the VWAP, testing the belly of the dragon. And then I'd be looking at adding a second position when it broke up below this Z3 line. So any violation below 471 is a second position, and then I would add a third position if it violated the belly of the dragon here. So this is where I would get short, a second position, and a third position on the way down. If I get long here, I treat these next three blue lines as places to be locking in profits at the VWAP, at the Bollinger Band mean, at the Z plus 1 and RL7 or RL90. I would add a second position automatically at the hump of the dragon, and then I would be looking at hump of the 10, hump of the second, the earlier hump of the dragon. I could argue that you could put a third position here, but I just decided I was going to add a third position on a Z3 excursion, because that's a pretty tight cluster, and with pennies, a penny of slippage. So I would look at adding, I'm going to get long at 496, I'm going to get long at 5 1/4, and the third position long at 545 in U.S. steel. Let's see if we can see where that. I don't have the trade execution on that, but that's that first move, and this is where it found support down here at 595, and then it moved all the way up in a couple moves to 540 one more time. So it recreated that earlier move once, twice, 3 times. So that trade frame had robustness all the way through the day. And that's how I play that as sort of the key support and resistance levels throughout the day. And then I want you to notice over here on the volume at price, also known as the market profile, this price level here at 515, it is a key control point of the day. That's the fair value as it being shaped by volume. So if it can break through here, that's why I don't mind waiting until 525 to really get through it and go. And once it did, that rest of that day, it kept finding support and going. So that's the U.S. steel. A lot of things to learn on that particular chart. That's why I want to spend the time on it, because that's going to be a lesson in one of those tortoise lessons about intraday framing. And then using the various indicators of the regression line, Bollinger Band, MACD histogram framework. That is a framework to apply adaptive statistics to price targets and support levels and decision points in the way that you manage the trade. I'm telling you, I just really believe with evidence that that RLXD entry and then the RLXD exits, that's the power of the RL10 and the Dragon. I mean, it really is. That's your entry and exits, and then everything else is kind of a refinement. These other things are really the same way that you use traffic lights and your GPS and road signs to start getting a sense of what the road could be like ahead, getting traffic reports in the morning and from the helicopter over. It feels like a helicopter flyover, looking at all these different points for decision making on the battlefield there. So that's what I want to say about that. This was oil. Oil was very, very good today. If oil doesn't go to 0, it can't stay below 30. So it didn't. And so U.S. Oil, USO, the oil fund, there was a gap up today. Now notice the rising RL270 all day, and then the rising VWAP. So I look at it this way. Slight gap up and sell off, find support at yesterday's Z3, and then the RL10 starts to turn. You get a PSAR flip. I enter when it crosses the VWAP and takes out the hump of the yesterday's dragon. So I'm long at like 480 with the stop down here at like 465, so 15-cent stop. Call it 20 cents. So entry at 480, second position at 495, third position at 510, and then all out at 5 1/4. So that's probably, let's see, 65, 95, and 25, like $1.20 of capture on 20 cents. So that's 6 execution hours. I just want you to notice the upper limits on here. These, like I think of these now as like traffic lights. When that, see if that, no, it won't. When the Bollinger Band rolls over, that means, price is consolidating. You're starting to get convergence back towards the mean. That coincided with a peak of the MACD line. And then you can see and that's warning, it's heading into the fall, through the fall, into the winter, and then all the way to it changes in the summer. And that lines up at the same time when the south side Z3 line starts to reverse, and you're going to get some convergent activity. And it held this well above the VWAP, which makes this a pretty relaxed entry when it crosses the RL270 and makes a Z3 pinch breakout from that Bollinger Band pinch. So long again at 515. Sloppy exit. I wouldn't mind if you were out here to lock in a game because it's failing right where it failed before. Not allowed to be surprised by that. And you're protecting against a move all the way back down here, which is below your entry. So this would have been an A exit. This would have been a B. This is about a C exit on a Z3 breakdown. I waited until it actually physically crossed the zero line into the winter. And so this was a first warning. Second warning that it was collapsing below the Z3 pinch with the VWAP in sight. So that's sort of the... and then I'm just putting some traffic lights about feelings and warnings and when to execute from the MACD histogram. Yep. Yeah, we've already seen that one. So quick speed run for the day. I appreciate you hanging in there. This one's going a little bit longer than the other ones, but there were some trading lessons that I wanted to emphasize. So this will go fairly fast. Alcoa. Speed run. So Alcoa, I'm not short these guys. They recovered pretty nicely and held even. So I'm stalking a potential bottom down here at 5 1/4. Not a washout pattern yet. Apple closed below yesterday's close, although it showed some indications higher, but not as compelling as, say, Alcoa or U.S. Steel. Just stalking. I just think the rose is off the lily on that, or the bloom is off the rose. Lily is no longer gilded. I just don't see how they easily convert to manufacturing elsewhere. Maybe that's part of what they're going to use all that cash for, is to if they were smart. Now, they should be listening to this because apparently the administration's listening to me. But Apple needs to announce an investment with tax support of creating Apple University, that will be a trade school with the dean of Mike Rowe to recreate the manufacturing capability in the United States for high-tech manufacturing jobs in some enterprise zone so that we can completely mirror image Huawei, but with enlightened employment practices and free healthcare. That's my next initiative. Look for it in the press. High-tech manufacturing central. And they could put part of that in Detroit and use the amazing industrial base that you already have there and the established supply chain. And then that helps you use that to convert to electric cars and blow Tesla out of the water. So we'll see if anybody thinks that's a smart idea. I already know that that's a smart idea. I'll patent it. Aussie dollar, we had been, you can see we were short from here. And then the stop we put down here yesterday, but it gapped down and then started rolling back up. So I just took it at the Z3 and locked in 565. Now I feel better for you, Luke. I appreciate you doing what you can with the Aussie dollar down there to support our goals and objectives. Yeah. Boeing, we had closed the short on it, and I'm just stalking this one, hoping to see like 90. Why not? I'm ready to get long that one here. Starting with the intraday trade and set up something like this. See how calibrated that is? Look at that eyeball. I think that's my trade frame right there. In let's call that Boeing. Caterpillar, great American company. We got long today, so that was the trade frame we set up yesterday. And it opened orderly and went through. A perfect example of an orderly trade with a low, two higher lows, three higher lows, opens up inside yesterday's range, takes out our mechanical entry, and closes well above the spine of the dragon. You do not get more relaxed and beautiful than that. What's the 30-minute chart on that rascal look like, I wonder? Funny you should ask. Good enough. So here, with a stop down here, never touched. Closed well at the height of the day. Off it goes. So we got to be ready to take out the hump of the 10 and the hump of the Z3. So let's just call this whole cluster the Z3 lines on the 30-minute bars. And let's think about adding positions there. And then this previous Z3 pinch, something like that. And then here. And here. And I think I'm in love with that one right there also. The where it collapsed in the peak of the dragon before it had the big collapse at 120. That's what it looks like on the upside, my friends. Yeah. What if the market melts down and this thing collapses? It's going to come down here to the belly of the 10. Belly of the dragon. Previous Z3 excursion here. That's what the whole, maybe one more. Let's call these as signposts. But you can see that the RL270 now has started to bottom out. That's like half of the cup. And then if this works, this rascal is going to go something like this. Let's just say that would be the objective trend line. I think something like that. Let's see what that looks like. Anything north of that black line tomorrow is going to be automatically wonderful. Okay? I wonder if we can make that thicker. It turns out that we can. Let's make that one thick black line, and anything north of that is going to be really good. So that's using a hybrid technique for trade framing. Just saying. Cliff. We got long, or I'm sorry, we covered the short here because it gapped down, sold off, and then started to recover. So it gapped down, sold off, started to rebound, and when it got to yesterday's low and blew through it, said, let me just take it and improve on my, instead of exiting at like 340, covered at 3 even. So that's 40 cents of improvement on 40 cents of initial risk. That's an execution R of improvement. So why not? Not ready to get long that on a swing yet, but intraday it's pretty nice. Timber covered the short on the same thing. Gap down, started to come back up and basically scratched, and then got long at 19 with a stop down in here. Let's pull this thing down. Let's put our stop below the belly of the 10. Call it $1. Okay? And then the upside on this guy is looking like the PSAR flip. And then that's where we could think about a second position right about there. Would have gotten through the dragon, through the PSAR flip, and then fair value, something like that. Yeah. Diamonds, we're just trading intraday. I've already seen that. Devon Energy up 21% today, so that was a scratch the short from yesterday. If this works, I'm going to make this a... let's just do it this way. Let's put a... I think I'm ready to go with these guys like this tomorrow. Fair enough. With a target here. And that's our trade frame for tomorrow. Emerging markets and EFA both scratched yesterday's trades, where, again, all of these were of the form of gap down, reversal intraday, market felt up, and it was turned out to be an inside day, so we'll just get out of those shorts and just scratch them, or maybe try to collect a little bit. Now, yesterday we got long on Japan. I said, hey, it looked like they were doing a better job of containment in spite of the aging population. And I think it's because they don't have such individuality that they're going to cluster on South Beach in Florida. They're actually doing what they're told, so maybe they're more enlightened. And then today was a nice follow-through day, so this still feels good. My stop is still going to be down here at the belly of the 10. But this feels like we could get another position if at the PSAR flip, and then the Bollinger Band mean. Okay? EWW Mexico. We're short. No, I'm sorry. We were short 2, covered. This is still an intraday trade. So I just start that one as a hybrid, and if it closes well, I keep 20%. So no change. Brazil intraday only. Home Depot. I thought really hard about going for this one. Now remember, we had tried this one long once and then took a fractional loss yesterday. I thought about this one today when it gapped down, sold off to Z3 and started to resume. I thought really hard about that. I didn't, because I had enough exposure and I didn't want too many companies in the stack. But that's on my short list to get ready for tomorrow. Okay, so let's say that we do this as the working. I'm still going to require my eyes to confirm what's going on tomorrow. Look at the calibration of that box. How awesome am I? Lucky. So that's what we look like there. IWM. We got long that one today. Right here, where they stop down here. And up we go. This felt like the speculators trade overnight, so I'd rather play the indexes than the companies. Real estate barely broke even today, so just stalking it. It's not a good defensive play yet. McDonald's, so we were short yesterday, covered it today. This was the original trade frame from back here, so then decided to get long when it went through that with a stop here. And now what I want is a... we're going to build that frame to the top now. And looks like second position here, third position here. Okay? Clean Energy. Appreciate you guys hanging in there. Doing great. Just stalking, watching. Didn't close all that well. Let's see if we can get... Yeah, it didn't close that well. Inverse oil, smackdown. When crude's up 10%, this gets smashed. It went from, so now that exit at 60, when this thing closed at 30, 33, that's how good that exit was, which was half. Remember, we got long this thing back in the day when the price war first started at 21, cashed half at 31, cashed the other half at 60, and then missed this entire move on the way down. That was a good directional trade, though. You saw me trade intraday with USO, though, non-leveraged. S down intraday. Virgin Galactic covered. We're 2 scoops short. It gapped down and then started recovering along with the rest of the world. Just why not? Enjoyed it. Simon Property Group. We had 2 scoops short, 1 and 2. Gapped up a little bit instead of gapping down. Here was yesterday's close, but it gapped up and then started moving up. So we just took it and said, instead of waiting for to get to scratch, we just took it right there and got some price improvement. So that's a pretty good trade. So that one's over. Just stalking. S&P, we already seen. Volatility and treasuries, I'm only trading intraday. Tesla, we were short one. It gapped up, so I got a fractional win, not much there, and now it closed at 430, 435-ish, or about 428. So Tesla's still on sale for those of you who believe it's the future. Natural gas, just watching. So oil, this is the very nice affirmative move to the upside. UVXY, how good was the exit yesterday at 130? It's now at 94. That was on 2 scoops as well. Man, oh man. Wiz is still broken. It closed below the open, so it's just broken. Walmart, this was the anomaly today. We took the gain yesterday, which looks enlightened now. And today's price action, maybe it's because it did so well that people were just wanting to make bank on it or what. I don't know. But it opened up, it opened high and then sold off hard the rest of the day and didn't close particularly well. So I think that's an anomaly. I think there's an opportunity to buy that tomorrow, and I think it's going to look something like this. I think the PSARs could hold. I'd like to buy it in that yellow zone if it's going up, and then use maybe the Bollinger Band mean as the stop. I think that's what I'd like to see. And then I'd like to buy it anywhere on momentum in that yellow box, and then a second position if it takes out that top of that box, which was our previous cash at Z2. So I think that's what I want to do. I'm just grateful. I still think we're going to see them as the supply chain manager for the rebuilding of America's industrial base. I think that's what we're going to see. Wheaton, hey, Danny had a nice series of trades on the video, so I'll let you watch that. Win, I'm just trading intraday. Yeah, and so we covered the short today in the usual way. Gap down, sold it off before it got to scratch. U.S. Steel. This one feels really good. So we were long and took a fractional loss, and then got long again today at that price is like at $5 ish, with a stop down here at like we're gonna call that 475. Here's where I want to add positions on the swing. I think at the skin of the dragon, PSAR flip, and right now the Bollinger Band mean and the fair value are all the same. So I'd like to have 3 positions in hand, getting ready for a fourth by the time it gets all the way back to the mean at $7. That will be massive goodness. You cannot be a nation if you don't make steel. I keep saying that. This was yesterday's trade frame and materials. It never got out of the box, so I'm going to keep that as my... I'm going to refine that box a little bit now. Because I think if the rebuilding is on, then this one should do well. So let's tighten that up to the daily frame. And now set this up like this. And say that's our trade frame for tomorrow. Okay? So that's how we'd like to see it open in that yellow box and then trade in either direction. And second position at the PSAR flip and the Bollinger Band mean breakthrough. Okay? Energy probably looked like it healed somewhat today. Although I'm still short this thing. So I'm short from that red line. I did not get out of that because I'm counting on Russia to do one more shenanigans. But I will take that hit if it gets me to there. Finance. Screw the banks. That's fine. Not trading them. Just watching them. Tech. Big tech. Just watching it. Although that looks promising. I think if you're a tech guy, you like that price action today and you would set this up. Long here. Short there. On that trade frame. With the second position at the PSAR flip. Third position is called the Bollinger Band mean. Okay? Oh, that was right the first time. Sorry. Healthcare, God bless them. So that's that. Let's just a real quick one on the daily reports. Appreciate you hanging in there. This one a little longer today, but I just feel like there was less panic today, so we got more time to be deliberate about the way we're thinking, starting to think a little bit longer term now. Okay, let's get this show on the road. Click on tools, sign content. It's not letting me. Oh, okay, sorry. Let's try that again. Here we go. Yeah, I just updated my laptop. Replaced with the next generation laptop, so I gotta. The first time I use some programs, I gotta reactivate them. So, all right, onward. Tortoise Daily. You've seen that one already. Still deeply oversold, except the 3-day. Bearish volatile. Still at -4 sigma on the risk Z. So all that positivity, yeah, we're in the eye of the hurricane right now. You can see, let's see, Boeing, Chevron, United Tech, Home Depot. Home Depot, guys, that just has to be great. What did Home Depot look like here? I just think that has to look great. Yeah, that's the weekly. You know, the hell with it. I'm going to buy some of that tomorrow just because. I mean, how do you not love those guys? So that's my detailed analytics. I'm going to buy some just because of reasons. Stupid. That's the only way I learn. Make a decision and then find the reasons. Auto framer Boeing, we've seen all those already. Big winners today, like Walmart. Over the 10-day period, big winners today. McDonald's, Disney, Goldman, DuPont, United Tech. That's interesting. United Tech was on the deeply oversold, but was a big winner today. So it was in the green today, but was a 10-period reversal. So United Tech, UTX. I don't even have that in the stack, but we're going to look at that one later. Maybe it's time. But that's how bad Boeing has been. Oh, mackerel. 75% loss over the last 6 months. Yeesh. Wow. ETFs, 70% loss in UDow. Boeing is worse than the triple leverage Dow. That's how bad Boeing has been. And everything's on the auto framer. Pinch and stretch. Chevron is the most expanded pinch box at 9 sigma and is at minus 7Z below its Z score. How do we not look at that one? CVX. Appreciate you hanging in there. But Chevron, for crying out loud, and up 4% today, and it was above the stack in SPY. I mean, good Lord, guys. Chevron, don't we have to buy that? That's weekly. And then daily. I think we got to buy it. We got to be ready to buy that one. Just because the Z snapback, especially if oil follows through tomorrow and Chevron got smashed more than anybody. Isn't that the trade right there? With targets Z2, Z1, and PSAR flip. Man. Boy, I really want that. I want to own that one. We'll see you this time tomorrow, see what's going on. See how smart that feels. Plenty in the auto framer and the regression line fractals, nothing squeezed. You've seen everything in the winter except Cisco and Walmart are in the spring. Cisco? This is how you end up getting things on your short list as you start seeing anomalies and then start slowly building your manageable stack. As long as I can fit them on one page, I feel like I can do it. Cisco. Holy smokes, look at that. It's in the 4th day of its turnaround. Hell yeah. Here. And off we go. That's what we like. We're going to need an improved internet now that we realize, hey, imagine this thing 50 years ago without the internet, trying to coordinate all this stuff. That would have been the return to the dark ages. The internet preserves the Renaissance. The internet is the second Renaissance. I don't think I've ever seen that written. But that's the other. Nations must make their own steel, and the internet is the second Renaissance. And Japan stays off the beaches. MDX summary, no surprises there. Steepness of the RL slope is at like -4 sigma, almost 5. The stretch is at -5 sigma. Volatility starting to peak. Z-score slopes, the RL30 is at -10 sigma. The RL90 has moved all the way back to the Bollinger Band mean. Or, I'm sorry, at -2 now. It's at -2 sigma. That's how steeply down the 90 period is. I got to adjust my yellow river net. I made a mistake. Okay. And that's everything I wanted to cover. Thanks for hanging in there. I got to end this so we can get it posted before midnight. Take good care, guys. Send me your questions. Thanks for hanging in there.